So these are rules for tax preparers, and these rules apply to individuals who prepare tax returns for a fee. I said volunteer tax preparers don't have to abide by these. But those who get paid to prepare tax returns have to abide by these rules, and they're found in a document called Circular 230. So they apply to any person who for compensation prepares a tax return, provides tax advice, or practices before the IRS. Now there are only certain individuals that are, and when I say practices before the IRS, that means if your client has a tax issue with the IRS, you are authorized to go and represent them. There are only three categories of tax preparers who can actually do that. And those are certified public accountants, attorneys, and enrolled agents. They're the only ones that are authorized to do that. So if you have, and practicing in front of the IRS also means writing letters on behalf of your client, which happens a lot. A lot of my job was writing letters to the IRS to substantiate something or to explain something on behalf of my client. If you are not one of those, you cannot, well, let me step back a minute. Registered tax return preparers, which is a separate subcategory of preparers that have taken certain educational requirements with the IRS, are allowed to represent clients in front of the IRS if they prepared the tax return. But if a client comes in and says, hey, I had this screw up 3 years ago, I prepared the tax return, I need somebody to write a letter to the IRS, a registered tax return preparer cannot do that. Only a CPA, an attorney, or an enrolled agent can do that, can represent even if they did not prepare the return. Now, pretty much anybody who has what's called a PTIN can prepare a return. That's a preparer tax ID number. There is an application process that goes along with it. The IRS, I don't know if there's a fee or not anymore. They keep going back and forth with the fee for the PTIN, but it's something that has to be added to tax returns. And I can't remember specifically what the questions are that they ask, but there isn't really any educational requirement to prepare tax returns. There isn't like a certification for preparing tax returns, but you're very limited in what you can do as a tax preparer if you don't have those additional certifications. And the ultimate certifications are CPA, attorney, or enrolled agent. You're going to learn more about enrolled agents. I have a student who I taught my very first year of teaching. So that was 6 years ago. And he went through all the classes. He also was a volunteer tax preparer in the VITA class. And I just got a LinkedIn notification that he had become an enrolled agent. And he was starting his own business as an enrolled agent. He hasn't finished his bachelor's degree yet, but he's going to Iowa State to become to get his accounting degree. But I thought that was absolutely fantastic. You're going to learn a lot more about enrolled agents as we go through the semester, okay? Because it is one of those career paths that is open to you that provides essentially expertise in, most people think of CPAs as the tax people, the tax and accounting people. Enrolled agents are folks that they have specific knowledge, vast knowledge of tax law. And they are, I would say generally speaking, they're probably just as knowledgeable as a CPA. You know, the type of training that they get and continuing education that's required, but they are specifically focused on tax. They don't do audits, they don't do compilations, they don't work in financial or cost or anything like that. They just do tax. But all of these people have to abide by the rules in Circular 230 if they're getting paid to prepare tax returns. Failure to comply can subject the practitioner to suspension, disbarment from practice, public censure, fines, civil or criminal penalties. Okay, they're quite extensive. We're just going to look at a few of the rules here that regulate. So they're here defined, they just kind of repeated themselves. Paid preparers have to register with the IRS and obtain this P-10, which I just mentioned. Those registered tax preparers have to pass a competency exam and have continuing education requirements of at least 15 hours a year, which includes 2 hours of ethics. Now, these also, CPAs, attorneys, and enrolled agents also have continuing education requirements, actually more than the 15 hours a year, and they have ethics continuing education requirements. You know that CPAs have more continuing education requirements than medical doctors. So 40 hours a year are required for CPAs. That P-10 has to be renewed on an annual basis. So general provisions here. The paid preparers who are subject to, well, all paid preparers would be subject to Circular 230. They have to sign all tax documents that they prepare. Those may be electronic signatures, but they have to sign all of the returns. They have to provide a copy of the returns to clients. Seems reasonable, right? The client's paying for it. Return the original records to clients. Now they can make copies of the records and keep them in their own files and that, but all original records have to be returned to clients. Exercise due diligence. What does this mean? It's kind of a ephemeral term, and it would be open to interpretation. It just means that you have done all the research that you should have done. You dotted all your I's and crossed all your T's. If you had a question about something, you inquired about it. If you were suspicious of something, you inquired about it. If you weren't sure about whether or not taking a particular position would result in success, you researched it. You looked at your judicial authorities, your statutory authorities, your administrative authorities. You exercise due diligence. You exercise best practices in preparing submissions to the IRS. Again, that just means anything that you submitted to the IRS was in a format that was accessible to the IRS, so it was understandable to them. You disclose all non-frivolous tax positions when such disclosure is required in order to avoid penalties. So if you've taken a position, well, any non-frivolous ones you can't take. Something that's way out there. Like, I'm gonna deduct my dog's food because I have to have a dog because for my mental health, that sort of thing. So that would be a frivolous tax position. But non-frivolous tax positions, if disclosure is required, you have disclosed it. Promptly notify clients of an error or omission on a client tax return. It happens, we're not perfect. Tax preparers make mistakes. If you discover that mistake after the fact, you promptly notify the client and you make a correction. Now, there's no requirement that you do it for free. However, if you want to keep clients, then you're not going to make them pay for your mistakes. If they have to pay extra tax, that's a whole different story. They're going to have to pay that. But there are preparers who will, maybe if there's a penalty, they'll cover the penalty, that sort of thing, and not charge them for making an amended return. So that's just best practices, business practices, right? You will provide records and information requested by the IRS unless the records or information is privileged. So if you get a subpoena, you'll provide it. If it's somehow been protected, if it's privileged, that means there's an attorney involved somewhere, right? You will inform the client if the client has made an error or omission in a document that was submitted to the IRS. So these are the things they must do. Here are the things that they cannot do. They cannot take a tax position on a return unless there is a realistic possibility of the position being sustained. Back to the dog food example, right? It's not realistic that the IRS is going to go for that. Even if you claim it and no questions are ever asked. you still have taken a position that if it were questioned, it would not be sustained, right? You cannot charge a fee contingent on the outcome of the return or any position except in limited situations. What does this mean? This means I cannot say that my fee is going to be is going to be 50% of your refund. Can't do that. There are preparers out there that do that. They're not supposed to do that. Reason being is if you're charging a contingent fee, chances are your motivation is going to be to get a refund, whether or not the taxpayer is legitimately due a refund. So it increases the likelihood of tax preparers being unethical. You cannot charge an unconscionable fee. Again, what does that mean? That is going to be open to interpretation. It's also going to be open to the particulars of the situation. You know, an unconscionable fee in Des Moines, Iowa is probably going to be a lot different than an unconscionable fee in Chicago or New York. So you charge $1,000 for a tax return that's only got a W-2. In Iowa, that's an unconscionable fee, probably. Most people would think that it was. In New York or Chicago, I don't know. Maybe that's the going rate. You know, it all has to, that's hard to define because it's going to be based on market forces, right? You cannot unreasonably delay the prompt disposition of any matter before the IRS. You can't put them off. If they want information, you have to be timely about it. You cannot cash an IRS check for a client for whom the return was prepared. So you can't have them sign over their refund to you. You can't be involved in that. You can't represent a client before the IRS if the representation involves a conflict of interest. So you can't, I'm trying to think of an example. I suppose if you're the CPA of a company and there's an IRS matter, you probably can't represent the company yourself because you've got a conflict with that. You can't make false, fraudulent, coercive statements or claims to make misleading, deceptive statements or claims. So this pertains to claims made with respect to advertising or marketing. Can't say I always get refunds for my clients, even if it's true. Those refunds should have nothing to do with the preparer, right? They're just, the tax return is prepared based on the facts. It has nothing to do with it could have something to do with the quality of the preparer if the preparer is just really good at finding deductions that other preparers, legitimate deductions that other preparers aren't finding, but you cannot make misleading claims. All right. So, paid preparers who are in willful violation can be censured, suspended, or disbarred. There are also monetary penalties. If the preparer takes an unreasonable tax position, subject to a penalty of $1,000 or 50% of the preparer's income that they received to prepare the tax return, whichever is larger. Also, if they use willful or reckless conduct to prepare the return, the penalty is $5,000 or 75% of the income from preparing the return. Other penalties, $60 per instance, failure to furnish a copy of the return, failure to sign the return, failure to furnish a P-10. I don't know how you can prepare a return without a P-10. I mean, especially since the vast majority of returns are filed electronically, you're not going to be able to, it's not going to go through. It's not going to get pushed through without a P-10. I suppose if you said that it was a self-prepared return, that's possible, that you wouldn't have to put the P-10 on. That would be lying about it. Civil criminal penalties for committing fraud, making false statements on tax returns, and yada, yada, yada. Questions? All reasonable, right? Now I've scared you all. Remember, it's willful misconduct. honest mistakes happen. Although, if a mistake happened because you didn't use due diligence, that's different, right? Okay.